Good morning, everyone. Hope you had a great weekend down here in Florida, South Florida anyway. We were like ducks. It's been raining. Anyway, hey, good morning, Howard, everyone in the room. Yes, Sal, I just started talking. So last week was uneventful, to say the least. And looking at, you can see the weekly chart there in the left side there, little narrow range bar. Let me just expand that a little bit, which isn't unusual after the wide range bar. Very large wide range bar on the move down, and the move up that occurred, you can see on the daily time frame and on the speak of the openness to lower interest rates. So now we are waiting for Wednesday after last week just marking time going nowhere. The gap up, the attempt to go higher on Tuesday, back down, chopping around, and just going nowhere, consolidating, waiting. And now we'll see if the market wants to continue to wait for Wednesday for the announcement to come out, which is assumed to be nothing. And then on July, the rate cut to be coming. But we'll see how it plays out. Markets typically anticipate what's coming. But, so far, I think it's going to be a sit on your hands as far as the markets go. There are stocks that are moving. We typically find those. And, as far as the credit spreads, which Dan will cover with you, it's kind of a good market for that until, you get closer to when the move happens. And then, maybe you have to get out of the way. But we'll see how it unfolds over the next couple of days. But markets are pretty much just marking time everywhere. You can see the futures here just chopping along here on the hourly chart. They moved up toward that resistance area and just pulled back here. I don't know what happened here a little while ago, but they looked like they were going to try and go up and they flipped back down. But overall, it's just what I call either a frog in the blender type of market environment here where you get chopped to death, or a commission generator as, traders try and anticipate one way or the other, and it fails. And an example of that, just looking at, Friday afternoon, looked like, let's just turn this over to a 5-minute, it started going up and then just collapsed all the way back down into the close. So it's just the way it's been. It is what it is. And we'll just see how things unfold here in the coming days. I'm just looking at the spiders, same message there, just chop. This was the gap up that occurred on Tuesday. We had a nice little 5-minute low short in the Qs on that day, and a lot of uneventful trading Wednesday, Thursday, and Friday. And you can see same thing going on here. Just markets waiting. Nothing we can do about it, but just follow the plan and wait for things to set up. So if we're sitting on our hands doing nothing, that just comes with the job. NASDAQ futures, inside day so far, just going nowhere. 50 MA, that's a simple moving average. Those that are curious, not an exponential. It's just been bouncing its head off of that. So we'll see which way things go. Consolidating that resistance, just forgetting about the news for now. We know what's coming, so we can't just discount. But bullish price action after a run up. Wide range bar igniting, wide range bar saying that momentum is going to slow. That's exactly what happened. It's going sideways at resistance. So those that bought here on those comments of a looming rate cut, they're not running away from the exits. Comments that I made in the letter over the weekend was, well, if they don't lower interest rates, which is widely anticipated, maybe the market sell off. And based on this price action, on the anticipation of a rate cut, the pullback, assuming it does occur, should be a buying opportunity. Since if they love the idea of a rate cut here, and July is supposed to be a slam dunk as far as that happening, buying the pullback should be a no-brainer once we get the setup. So we'll see. Rate cut should result in a move up potentially to new all-time highs, and I would assume at that point the markets just go nowhere, just waiting to see what the next news will be or what comment will come on China or whatever. So Dow, same story all over, big bar up, consolidation, attempt to go higher, back down again, more of the same of what we saw last week. So expectation is to be in this trading range. Let's just kind of move our lines here. And so there's our lines in the sand there within this range. So unless the prices break down or break out, we have to believe that things are just going to go nowhere. So if you can trade within this range back and forth, more power to you. Probably better off looking for what's moving down here. Some of these stocks that are moving up or down, some are moving more significantly than others, of course. So as we go through those, we just look at the chart patterns and see what's there that might be on its own page, ignoring the dead time here in the broader markets. Bonds, same story, just waiting for the Fed for more news one way or the other. We covered this last week, the fact that they pulled back here, bullish pattern, run up into resistance. They're consolidating there and just chopping around in a bullish pattern. And that pattern suggests going higher since it's not backing off from that resistance area. Buyers are not running away. So pattern like this, if it can get through here, opens up the door to a move higher, which results in interest rates going lower, and then more of the same old yield curve inversion, which some of them are already, and a breakout here would move the last difference in yields, the shortest 3-month versus the 30-year, to an inversion. And I have to believe at that point the markets are going down, and then the Fed maybe gets more aggressive in July. We'll see. It's a lot of wait and see, as I posted in the letter over the weekend. We're on wait and see mode here to see which way these markets are going to go. And as we look at bonds, equities, and one of the things that looked interesting was ags. So you guys may want to take a look at that. And, corn has been moving up, and soybeans and wheat. And looking at this monthly here, it's been in a downtrend for quite a long time. But based on some recent moves, that's something that we'll be keeping an eye on to see how they react here to this resistance. How it's a difference between the Dow and NQs is that the Dow has support to the left and NQ has resistance to the left. You do not get it. I'm not sure the statement or question, Howard, but it's more of it is what it is, meaning the Qs were stronger here, and so they had a bigger decline at the time. So they showed, while that relative strength turned into relative weakness, the fact that they're up against resistance here and consolidating, bullish in of itself, as I explained. However, the Dow was able to get above that. So, it showed relative strength here. He doesn't get the email letter. Well, if you're, I don't know, well, email me, Howard. Email me. This way I can look you up. If you're not a subscriber to the letter, then you're not going to get it. If you are not getting it, that's another story. We can look into it. Oil, right? So that came down, right? So everything moved the way they should if the broader markets, all of us, fund managers, so on and so forth, believed that a recession was imminent, meaning interest rates are going down, oil is going down. And so now it's, again, we're back to the idea of a wait and see. Oil has stabilized here, possible W bottom, but this market as well, is on hold. So when it retested this area, and if you remember last week, I mentioned to look for this pattern. Now, it formed the reversal, but so far it just cannot get out of its own way, one way or the other. So another market that we have to keep an eye on, so to speak, what you should do, and if you don't have futures, just use USO and set an alert up above or up in this area here and down below here. And the same thing with bonds, right? Which way are they going? Are they breaking out above the highs, or are they moving down toward the bottom of this consolidation? So while we will be looking at different stocks and whether they're directionals or spreads, we don't necessarily have to be watching the bond market and the oil market. We're not trading them. So we'll just set alerts and let the computer keep an eye on things and make us aware. Same thing intraday. Well, we monitor market internals. What's the put call ratio telling us or doing at the moment? What is the NYSE tick indicator doing as it reaches an extreme? So setting alerts on these intermarket analysis situations or market internals, we don't have to be staring at them. We just let the computer keep an eye on them. Gold here is on hold. Wait and see what's going to happen here. But longer term, there's some big potential here, and this may be the market to really be in the latter part of this year if it can clear these highs here. You see all these PH pivot high, which means every time it gets here, it gets knocked back down again. So it's been in a trading range here since 2013. And so you got the sharp move down, the correction over time, which has created this big void above. And if it can clear these, it's got some big potential to move up. So we shall see. And this is, again, it's the market's anticipating that at some point the Fed is going to lower interest rates. So inflationary concerns, blah, blah, blah. So we'll see what happens, and we'll keep an eye on the dollar and all of those relationships that will confirm or the lack of. And what else can we take a look at here? Keep an eye on semiconductors, because obviously they were in favor. They came down hard, which helped the Qs come down very hard. And while a lot of markets were just marking time last week, semiconductors were getting knocked down here. So some relative weakness. So we want to keep an eye on that to see if that continues or whether they might bring up the rear. Russell, so more relative weakness under the 50, under the 200, consolidating at resistance, just more confirmation of wait and see. Transports, same story. And that's been the case even throughout last year, where the Russell and the transports were the weaker. They led the way down. And then as they bottomed, they played catch up to the S&Ps and the Qs. So they're just hanging out here at resistance under the moving averages, and we'll see whether they can play catch up as well. So that's pretty much it. The long and short of it is we're sitting on our hands as far as the market goes. We'll look at individual stocks to see what they're doing. The meatless company here, they're coming back for it again after last week's decline. So maybe some of these IPOs, I was taking a look at, is it LK, which looks like maybe it might be able to move up here. It's up here a little bit pre-market and had this reversal there on Friday. So a little relative strength on Friday versus the broader market. So we'll see how that does. So that's it from me. All yours, Dan.
All right, good morning. Yeah, as you know, I got us into LK Friday afternoon. And when I was scanning Friday afternoon, I have a huge bullish watch list. So I think we're doing a great job hand selecting things that are way outperforming the broader markets. So we have a put spread on LK and also a covered call. MHK, the same, that's in both letters. Lily, we have a call spread in the weekly. And then this is our only problem child. Roku had it was a beautiful setup, beautiful relative strength Friday morning. And then this, bearish retracement. I was answering one subscriber. He said, hey, if I miss the entry and it comes back, can I get it? Every time, even if it's below the price. And I said, I don't know. It has to be an independent decision. So I used this Roku as an example. And I said, look, this was a bearish retracement on the 15-minute chart, so stay away from it. We're still in it because it held 50% of this bar, but he's on probation. He shouldn't have done that. Now, swing and options traders, advisory letter. We have a lot of opens, FND, we're long stock. Aries, long stock. Synapse, and a number of these are just half lots that we did Friday into the close. I didn't want to get too bullish because of the broader markets. KMX, long stock, we're getting nice, a very nice gap up there. Let me put him here and there's some volume there, so that's nice. Triple W or short stock, you can add under last week's low. Column, short stock, you can add under, the lowest of these bars right there. BBBY, we're short stock. It looks lower. QGen, we're long stock. WLL, gapping down a little bit. We have a bear put debit spread. Travelers, covered call, we've been in since June 12th. And I mentioned the Mohawk and the LK. All right, so that's all the opens. Roku's the only problem one. CJ, I think it's oil, but gapping up to 1150. Still in the downtrend, but let's see what it does on that bullish. With Bitcoin up here and a little riot, $3, still in a downtrend. QURE, $79, gapping all-time, it looks like close to all-time highs right there. We'll see what it does. RWLK. Deep retracement here, hanging on by a thread, but gapping up to 550. If it can get over 573, then that might be worthy of a bottom fish. Papa Delta, I saw this one scanning the weekend. Or maybe it was mentioned, yeah, it was actually mentioned in Barron's. That's where I get some ideas. I don't even care what the story is. I just see if I like it. And daily, weekly, monthly. So maybe it was a positive story of why it's gapping up. But that looks good, Papa Delta. Facebook, I don't know what the news was, but that's a very bullish pre-market 15, 185.30. I mean, this might, that is real resistance right there. This kind of has the looks that if it went sideways for a week or two, then it'd be a beautiful reverse head and shoulders. But this consolidation and gap up on Friday, gapping up again. Wow, that's actually a big gap. It's bullish. I remember on Friday we were looking for a put spread. Honeywell, daily, weekly, monthly. This looks poised to break out to all-time highs. Keep an eye on that. Visa gapping up a little bit, but it's a bearish 1, 2, 3. If it can take out Thursday's low for a call spread. AVY is just a regular nice buy setup after a big retracement off the lows here. It's actually a small bull island reversal right there by definition. MAXR. I don't like this this ugly M top right there, but it's kind of getting interesting again. Get your pullback there on the weekly. ITRI, I think McGraw, this came from you, or I like it over Thursday's high. DuPont, we have as an idea, a put spread and long stock. Same with this, CTVA, a little retest pattern here. It's sloppy intraday. And I gave that in 2 lots. Charlie Foxtrot, this is one of these bottoming commodities. Had a nice move all last week. Well, Wednesday, Thursday, Friday. We'll watch that on a pullback. WTR, I like the red bar ignored and to new highs. Pod, I was looking for a put spread on this beautiful engulfing day. We'll see how it does on a pullback. Lift, these things got sloppy. CSII over Thursday's high, that looks like a McGraw pick. AIG, I like. Cody, I like. Kim, I put this in the letter as a core trade, just to do it by a half lot around current levels. I like the weekly, monthly. Aries, it's bullish. Yum. I mean, I have a huge bullish watch list. ALK, VTR, this one over the high, BKH. It's Starbucks, been on a tear. Allstate, these insurance companies look good. Pulte's breaking out. That looks good. Aflac, HIG. SMG. All right, I think I'm done. CRCM, we have as a short. Apple, there's no trade. Amazon, Google. Netflix acting bullish pre-market. Look at that 15-minute. We'll keep an eye on that for a put spread. Or a day trade directional. Tesla, if it can take out Thursday's low, is a call spread. Facebook, definitely the FANG pre-market leader. Marijuana, there's Michael Jackson, it's a mess. Papa Mike is still a go under 77 bucks. All right, that's it for me. 928. Futures pre-market broke out and now they're, wow, it looks like things are just, like Craig said, just buying time here. And that is it. So you have a minute to go get your coffee, water, whatever you need.